A VTL is, of course, a valid trend line, and so here, for instance, it would have drawn a 40-week VTL somewhere over there, and that's simply a straight line. Then a VTL confirmation is when price crosses that VTL, has it accurately confirmed the positioning of the 18-month cycle. So in other words, the information that we get from price crossing a VTL is confirmation of a cycle trough or peak. What Sentient Trader does in order to perform this rating is it goes through the analysis and it looks at those VTL confirmations and it asks itself whether, according to this analysis, what percentage of the VTL confirmations turned out to be true. Okay, in other words, when price crossed the VTL, the confirmation of the peak or the trough in the cycle was true. Now, unfortunately, VTL confirmation is to some extent a self-fulfilling prophecy because it is drawing the VTL after having performed the analysis. So the VTL confirmation is always very high. It is often 100%. But you can compare two different analyses. If you have one analysis that has a VTL confirmation of 92% and another analysis that has VTL confirmation of 100%, then the 100% VTL confirmation analysis is probably a better analysis. Okay. The next thing is the FLD confirmation. The FLD confirmation is exactly the same thing. When price crosses an FLD, it confirms the existence or the formation of a trough or a peak in a particular cycle. So Sentient Trader goes back through the analysis, it finds every single price crossing of every single FLD for every single cycle in this analysis, and it asks itself the question: did this price crossing of the FLD, did it prove to confirm the position of the trough according to this analysis, or would it not have confirmed it? As you can see, the FLD confirmation is always a lot lower than the VTL confirmation rate. An FLD confirmation percentage of 70% is okay. It's not very good. It's an okay confirmation. Okay, so that's the FLD confirmation. The other pieces of information that are provided in the phasing analysis rating are the nominal deviation. What percentage do the length of the cycles that have been found in this analysis deviate from nominal? Nominal are the cycles that we are expecting to find in this market. Okay, according to the nominal model that is used, which is simply the list of all the cycles that are used to perform this analysis. As you can see, the nominal deviation in this case is 2%, which is a very small deviation. Obviously, the better the analysis, generally, the lower the nominal deviation. Although that's not always true. If we were analyzing gold, we would probably find that the nominal deviation was much higher than 2%, because cycles run longer in gold. It's generally believed or generally accepted that cycles are longer in gold, so the nominal deviation will be greater than 2%, probably, but that does not necessarily mean the analysis is not a good one. Okay. Finally, there's a rating called cycle regularity, which at the present in the present example is 67%. So this is a percentage. If every single cycle in this analysis was exactly the same length, if this was artificially generated data and every single cycle was exactly the same length, remember one of Hurst's basic cyclic principles is the principle of variation, which tells us that the wavelength of cycles are constantly varying. So if every single cycle was the same length, then the cycle regularity would be 100%. If every single cycle was different from the length of every single other cycle, then the cycle regularity would be 0. A cycle regularity of 67% is fairly usual. It's fairly standard. I wouldn't say that figure gives us any particular information about this particular analysis. Okay, so that's the first way that you can. That's the first way that you can start considering how good is the analysis that Sentient Trader's performed. All right, Sentient Trader, of course, is a powerful tool. It's not a black box, and we encourage you to look at an analysis after it's been performed, and to look at that analysis. How good is this analysis? Because if you're working with a really good analysis, then of course you can be confident that you're making the correct trading decisions. If you're working with a poor analysis, then your trading decisions are going to be poor as well. It's as simple as that. So it's very important that you are able to look at analysis and say, how good is it? Okay, there is other information that is provided here. You can see there are various alternate analyses that are confirmed, that are presented here. You can explore that and have a look at it. But that's the basic way of taking a look at the figures, if you like. However, I believe that much more importantly than looking at those numbers, because the rating of a phasing analysis is really a bit of a grey area, as I was trying to explain earlier. It's a bit like judging a painting. How good is a painting, or how good is an analysis? It's a little bit of a grey area. So in order for you to really be able to judge an analysis, there are a few other things that I should point out. And I'm just dragging the bottom of this chart up so that I can demonstrate something here. The first thing that you should do, and the thing that I always do after having performed an analysis in Sentient Trader, is perform a very simple visual scan of your analysis and check that the major troughs of the cycles, according to the analysis, are lined up with major troughs in the market. Okay, so let's have a look at this. I always start with the longest cycle. In this case, it's the 54-month cycle. Here's a 54-month cycle trough. Look up in price. Yes, there is a trough in price. Here's the next 54-month cycle. Look up in price. There is quite a prominent trough there, but many people would say, why isn't the 54-month cycle over here? That's surely where it belongs. And if you've been looking at recent posts on the forum, you'll see that this is a big debate that is raging amongst Sentient Trader users. Raging is the right word, but it's a very polite debate that we're having about where that 54-month cycle trough should be positioned. Fortunately, we're using a very robust theory to trade the markets. So, in fact, we're still able to make the correct trading decisions, even if the positioning of that 54-month cycle is not perfectly correct. But the first thing you should do when you're looking at analysis and deciding whether it's good is you should see whether these troughs are positioned below major troughs in price. There's the next 54-month cycle trough that I've just drawn with an arrow, and as you can see, it does line up with the big trough. Of course, it's the October 2011, last year's October trough, which, according to current thinking, my current thinking certainly, was in fact a trough of at least 18-month, if not 54-month significance. So that's the first thing I do, is I have a look at the cycles and see whether the troughs in the analysis line up with the troughs in the price. Okay, you start with the longest cycle and then you look at the next shorter cycle. So looking at the longest cycle, you can already see there is one question mark over this analysis, which is should this trough be over here in August of 2007, or should it really be down there in March of 2009? So we've got a question mark. So there is a bit of a question mark over this analysis. Okay, let's have a look at the next cycle down, 18 months. And so that lines up nicely with the trough that does look prominent. It looks like a very likely trough of the 18-month cycle. There's the next one, also a very likely trough. Here's a 40-week trough. Also looks fairly prominent. Here's the next 18 months. That is indeed a very prominent trough. And there's the next 18-month cycle, also a very prominent, very likely trough. So you can see what I'm doing. I'm basically checking the pattern recognition that Sentient Trader has performed. That's all I'm doing. I'm just saying, where are the important troughs, and do they match up with troughs that are actually in the price? Okay. So as a basic rule of thumb, a good analysis will have troughs that very simply will have cycle troughs that very simply line up with price troughs. It's as easy as that. Now, at this kind of scale, almost any analysis that you perform with Sentient Trader will probably look quite good. Of course, where you need to really start questioning the analysis is at the much greater scale. So let me change this to a daily chart and start having a look at the same type of questioning analysis in the same type of way, but at a smaller detail. Let's have a look at the 20-week troughs here. Okay, there's a 20-week trough over there. All right, that looks fairly good. That's a 40-week trough. That looks fairly good. I'm sure you agree they are lining up with prominent prices. Okay, here's the latest 20-week trough, which according to this analysis was in the first week of March of this year. And as you can see, there have been very few troughs in price recently. So yes, that very possibly is a trough of the 40 weeks of the 20-week cycle. But now let's have a look at the 80-day cycle. Okay, there's an 80-day cycle which is lined up with that trough. Can you see that? Okay, it's a bit displaced. Trough is over here. That one's a little bit displaced. So again, when you see a trough in the analysis that's not perfectly lined up with the most obvious trough in price, that very simply raises a question mark about the analysis. It doesn't mean it's a bad analysis necessarily, but it raises a question. Okay, you should realize that where the diamonds are filled in, okay, the exact placement of the shorter term cycle troughs is not critical, because it's not going to affect your trading decisions that you're making today at all. So in fact, the really important part of the analysis for you is really the region where the troughs are hollow. Okay, so although you can raise question marks about an analysis, a few years ago, it's not really very important in terms of the analysis. And Sentient Trader often skimps the analysis process when it's looking that far back. Because what's very important is what has happened recently in terms of you making trading decisions today. Okay, so let's have a look at what happened recently, and let's have a look at the 80-day cycle. The 80-day cycle is there. Okay, now the most obvious trough in price is over there. Okay, so here again we have a little bit of a question mark on this analysis. Okay, it's not the end of the world. It doesn't mean that it is necessarily wrong, but there's a little bit of a question mark. So when you're considering this analysis and considering whether it is a good analysis and whether you can now make trading decisions on the basis of this analysis, you need to ask yourself, okay, well, why has Sentient Trader done that? And in order to understand why it's done it, you almost always need